back. Now, India has surpassed China to secure the top position among 30 developing countries in a global retail index. The 2017 Global Retail Development Index, released by A T Kearney, cites India's expanding economy, relaxation of FDI rules, as well as the consumption boom as the key drivers for India's up move. Joining us now to discuss this further is Himanshu, Bajaj partner at A T Kearney. Himanshu, thanks very much for joining us. What makes India more attractive as a retail destination in comparison to China?
Two major factors that has driven the growth for India this time. One is in terms of the attractiveness, where we have really ranked high. Second is in terms of the regulatory environment. These are the two factors where we have seen the increase in our ratings. That has got us to the #1 spot this time. At the same time, for China, the ratings have really dropped on the third parameter of the overall ranking, which is around saturation. Given the slowness in demand in China, as well as in terms of capacity utilization, which is dropping, those numbers have gone down. And that's why India has been rated better.
But let's talk about the retail space in specific. We've seen double-digit growth for India's retail sector. About 20% is what we've clocked. Do you expect that to continue? And speaking specifically of FDI, 100% FDI is allowed under the single brand route. Multi-brand continues to be a maze of grey, so to speak. How confident do investors feel about investing in the retail story?
The first question in terms of how we see the growth, we think that the growth of modern retail, which is expanding at over 20%, that will absolutely continue. We expect that the size of modern retail will double by 2020. The factors that are driving this confidence, and especially when we look at global retailers, one is the attractiveness of the market itself. I mean, the three key factors around it, the GDP growth, strong confidence on that, the urbanization and the growth of tier 2 and tier 3 cities, big pickup on that side. And thirdly, what we are seeing interestingly is the change in behavior of consumers, which are now giving value to quality and service and ready to pay for that. And we are seeing that across areas. You can see that on the cab side, where people are using more Ubers, Ola. You can see it in how the saloon business has moved. You can look at it, how people are preferring split ACs over other ACs now. So that's one element of it that's driving confidence. Second part of the story is around the regulations itself. Two elements to it. First is the measures that government has taken in the last 1 year, not specifically to retail, but driving more and more confidence and direction of growth for the organized retail. So that's the demonetization, that's the GST change that is coming up. And the second side, which is in terms of FDI regulations. Over there, it's a slow but a steady trajectory, and I think that's driving the confidence of the global retailers. So in 2011, we had come up with the 100% FDI in single brand retail. So the question is not that whether that has been changed and whether in the multi-brand that's going to come faster, but smaller elements and smaller tweaks to it. For example, at that time, 30% of the sourcing had to be from SMEs, MSME segments, and that was very complex and difficult to execute. Now, those tweaks coming in, that has moved towards 30% from manufactured, made in India. Similarly, the regulation on 100% FDI in terms of multi-brand food retailing. And within that, again, government is now looking at different measures on how to make it more attractive for global retailers. So the direction is very clear, and that is what is driving the confidence in the market.
Direction clear, confidence in the growth story for the Indian retail sector. India surpassing China, coming in at #1 on the A T Kearney Retail Index. Thanks very